Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence. Oh man, Bitcoin fell once again. If you haven't been looking at the charts, maybe you haven't noticed, but we went up to a double top yesterday. You can see, like, after the FOMC meeting and Jerome Powell was speaking some very dovish things too, some really good things for the market. We saw a huge dip after the market closed. Right when Jerome Powell was speaking, we had a big pump up. Then we came down a little bit, which is completely normal. Some liquidations happen. But then after the market closed, big drop down, like hour after hour after hour until we hit under $90,000. I want to explain why this happened. Right now, it doesn't look dramatic because I'm way zoomed out, but this was almost a $5,000 move within 6 hours. So let's explain why that happened, why this continues to happen. What is wrong here? Is this just, what we're bound to do for the next 2 years, continue to go a little bit higher, then smash back down? Let's talk about that. We'll also talk about what crashed the traditional markets last night. Like, it scared the market a lot. And we'll talk about how concerning it is. If you don't mind, hit subscribe so you can see future videos like this. I know this is a little bit tiresome at this point, but keep in mind this volatility is pretty small compared to what we've seen in previous cycles. So this is kind of what you have to sit through with Bitcoin. To be able to get the 5-6x from the bottoms, you have to sit through this back and forth. And there are years of it until the 1 year where we go up, or the 2 years where we go up consistently, and then we go back down, kind of recover, and then we continue going back up. So yeah, it can be a little bit tiresome, but hang in there right now. If you want to trade crypto, there's a link to BYDeFi. There's a link to it underneath the video where we have 3 days left. So it's in the link tree. It's the second link down after you click the link tree. 3 days left where you can trade and get up to $10,000 worth of Bitcoin. We run this every single month. So if you sign up now under my link, you'll still be able to participate next month as well, because anyone that's ever signed up through this link is participating automatically. So an awesome way to get some extra crypto. And I realize some people don't like how long my intros are, but I was watching a video last night. Someone introed for 4 minutes and they didn't have like that disclaimer that I have to put up on screen. So a little bit of slack. I appreciate it. Just a little bit of slack here. As we can see, the traditional market, Dow's up today, but S&P 500 slightly down, the Nasdaq's down. We'll talk about why that is, what actually happened, because yesterday we actually got a pretty dovish Fed. The market loved this. I mean, yesterday the Nasdaq finished up significantly. Dow did too. S&P 500. Everything was green yesterday. They cut rates. They cut the rate by 25 basis points, or a quarter point. We saw Powell saying that they actually think that the administration is lying about economic data, and that the economic data was overstated by 60,000. The job gains was overstated by 60,000, meaning that last month's job growth was actually negative, which means that there's more of a chance of a cut in the future. And we saw them say that they're going to start buying $40 billion worth of treasury bills over the next 30 days, starting tomorrow, starting on the 12th. So we went from quantitative tightening 2 weeks ago to now quantitative easing pretty significantly. So the markets love that. So why did we crash back down? Well, with Bitcoin, part of it is due to liquidations. Yesterday we did have about $400 million worth of liquidations, but it was spurred by something after hours. And what was that? Well, Oracle announced earnings. They're down 14% right now. They raised $105 billion of market cap. Basically, they fell down significantly. They raised their CapEx estimates by $15 billion. They also missed on revenue at a time where AI demand is huge. They missed on revenue. I believe their free cash flow is actually negative. So they're talking about spending all this money, but people are worried that they're not really performing that well. They're claiming they're a juggernaut, but now, people aren't so confident. So this is the largest daily decline since 2001. I'll be honest with you, I didn't read much of this. Well, I didn't read too much about their earnings in general. And I I'm not an expert on Oracle in the first place, but some people are worried about the AI trade, right? So this is kind of scaring the market a little bit, or scaring the market at least about Oracle. As we can see, like Nvidia today, also down 3%. So people are a little bit worried about the chip makers in general, 3% down for AMD. So this is affecting the broader market. Last night, we had futures down, the S&P 500 down 1%, the NASDAQ down 1.5%, VIX went up 3%. This affected crypto in the sense that, people going risk off a bit, and then liquidations poured in, especially as some people didn't really pay attention to Oracle. So, there are people that get caught off guard when something happens in traditional markets after hours, and maybe they had aggressive long positions on without proper hedging, and then they get liquidated, right? So this caused a drop in the market. Now, is this a concern, right? Well, I guess it depends. If you think the AI trade is done, then yes, it could be a concern in the sense that it would affect the general market, the traditional market a lot. But it seems like spend is still going up pretty significantly into next year. I wouldn't expect Google, Amazon, Microsoft, Facebook, or Meta to continue to ramp up AI spend at this rate. Right? They just don't have enough money to be able to do that, to continue to grow CapEx by 50-60% a year for the next 2 or 3 years. So the market is pricing in that Nvidia at least will slow growth, and that's why it's not super expensive. It's maybe at a 25 to 30 forward price to earnings ratio, even though they're growing so quickly. So the market is pricing in a slowdown, but I don't think the AI trade is done. These companies want to continue to spend. Now, I'm not directly positioned in NVIDIA or AMD or Oracle, but I'm positioned in Google and Amazon. And like a churn in the market, like if people start selling off NVIDIA a little bit or AMD a little bit, but then they reposition into Google and Amazon and these other companies that will really benefit from AI long term, I don't think that'll be the worst for Bitcoin. But if the whole market falls down, if the S&P 500 or NASDAQ fall down 10-15%, yeah, that's gonna hurt Bitcoin. But I'm saying this, and we're near all-time highs. Like we're within 1% of all-time highs on the S&P 500. So I'm not too concerned about it at this point. And Bitcoin falling down on liquidations is nothing new. I mean, you just look, like we're just chopping up and to the right. It's totally fine. We're saying higher lows, higher highs. We did double top yesterday. But it's not super concerning. I mean, it's not the best thing in the world. I'd rather have us set a higher high. But I totally realize that we could fall down much further. Like this is a weird time for the market where we could see Bitcoin fall down significantly because this could be a bear market. Like there's no question about it. This is what's happened every single cycle. Some people are saying that the cycles are done, and that could be the case, but they're also kind of a self-fulfilling prophecy. Like just the fact that we're down 30% from all-time highs kind of shows you that the cycles are still a thing, right? Or maybe we're not down 30% now. I guess we're somewhere around there. But it shows you that the cycles are still a thing because there's not really a reason for us to be down this much, is there? Like the traditional markets are at all-time highs, and yet Bitcoin's down 30%. There's a reason for it, right? It's most likely because we have seen bear markets in the past around this time of the year, right? And the post-halving year. So some people have just sold out completely. I mean, you can see it. You can go to Twitter. You can look at the views on these videos. There are less people around in the crypto market because some people have taken profit. So whether you think the 4-year cycle is done or not, the fact is it's a self-fulfilling prophecy. So even if we jump out of this, the reason we're selling off or have sold off from 126 down to 80 was because people were concerned about the 4-year cycle. So in a way, the 4-year cycle is already playing out. And I'm not saying that will be the same where we're going to go into a 1-year long downtrend from here and just go down, 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 bottom in a year. I think it could be much sooner than that because things have been moving faster and people want to position in assets that will do well long term. And if you can buy Bitcoin at 50%, I think people are getting a little bit 50% discount. I think people are getting a little bit smarter not to wait until it hits 70% because you might not get there, right? So I'm not saying we're going to go down that much. We could rally from here, right? I don't know, but I'm not saying that you need to know either. You can dollar cost average into the market. That's what I'm doing with my spot Bitcoin or my Bitcoin ETFs. That's what I'm doing. And then I'm continuously trading as well with low leverage, long positions. Now, we did get some good bad news is good news just now. U.S. initial jobless claims came in higher than expected, which means that there's, maybe a little bit more concern about the job market, which could cause us to be more likely to cut in the future. Now, there's only about 20% chance that we see a cut at the January meeting, which is basically nothing. That means that we probably won't, we really won't see a cut at this point. But if jobs get worse, we could see a higher chance of a cut, which would be good for risk on assets. What's the quote unquote smart money doing right now? Well, Tom Lee just bought another 33,504 Ethereum, or $112 million over the last 6 hours. We heard from Michael Saylor this week saying that they're buying $500 million to $1 billion worth of Bitcoin a week right now. So the smart money, quote unquote smart money, is buying. And, there are people that are dollar cost averaging. This is in the Bitcoin Reddit. I now own 0.1 Bitcoin. This person says, that's it. I know you guys most probably have much more, but this is a massive milestone for me and my family. I will keep growing my Bitcoin step by step, and hopefully it will help my kids 10 to 20 years from today. This is fantastic. I mean, there are a lot of people upvoting this, but the key is to buy good assets over time. I got into a trap early on when I was investing of feeling like, okay, I have, let's say I had $10,000. I felt like I need to build out this portfolio, this diversified portfolio with different assets in different sectors, and outperform with them and get a little bit of exposure. Like I needed something in the space sector because that was going to be huge for now. So I tried to pick the best one there. But then there's something in, bio, what am I trying to think of? Like the bio space, biotech space. I needed something there. I needed like a big media giant. I needed to build out this perfect portfolio of all these different assets. No, the fact is, you can focus on just a handful of good assets, and you don't have to continue buying new assets. The fact is, you can just, let's say you have 5 different assets you like buying, like S&P 500, Bitcoin, Google, Amazon, and some other stock, right? You can just wait until one of them's at a good price and then buy it. And then keep on buying it until you feel like it's fairly valued. And then you can just wait to buy it again for years. You don't need to go, when you can't find anything good, just dollar cost average into Bitcoin or the S&P 500 to get a larger allocation. And then once one of the other assets that you like gets cheap, buy that. You don't have to find something new when there's nothing that screams like it's cheap. You don't have to have a 15 or 30 different equity or crypto portfolio. And that's kind of how I've turned over time. Right now, I probably have about 10 equities that I own. But only 4 or 5 of them are significant stakes. I'll be honest, I've had a dividend portfolio that I've just had an automatic buy on for the last 5 years. It was right when I started on YouTube full time. And it's just a small amount of money that I continue to put into it every week. So that actually they're supposed to be dividend stocks. So that actually doubles my equities. But this portfolio is so small compared to my real stock portfolio that I have probably 5 different equities, 5 different stocks that are very small allocations to my overall portfolio. So really I could get rid of them and just put in the S&P 500. But I like the idea of showing this to my kid one day that I just dollar cost average a small amount every week. I never stopped. And this is what happened to it. And, I get dividends, that kind of thing. But I also have Bitcoin. And my main portfolio of equities, I have a lot of VOO and QQQM. And then I have Google and Amazon. And those are my largest positions by far. Then I have, a handful of positions like Meta, Uber, and Texas Roadhouse that are maybe 2 to 4% of my overall portfolio. And that's it. That's all I need. I'm happy with that. S&P 500 and QQQM gives me total market diversification. It is kind of like the benchmark. Some people use Bitcoin as the benchmark. If I'm going to buy anything besides Bitcoin, it needs to compound at 40% a year, 50% a year. I use the S&P 500 because honestly, if you're looking for stuff that's going to compound more than 40 or 50% a year, you're just not going to find anything. So I use Bitcoin as one side of my barbell approach, where this is very quickly moving, but very volatile, very high upside, very volatile. I don't want to say riskier, because I mean, it is riskier in the sense that there's a higher chance that's going to zero than the S&P 500 is going to zero. There's no chance that the S&P 500 is going to zero. So I use that as one end of the barbell. Then the S&P 500 and real estate are in the middle. And then I have cash that I just use for buying these other assets, but that's on like the risk off section of the barbell. And yeah, some people would say, well, there's no point in holding cash because it loses to inflation or it barely performs. Might be true. Over time, it would be better to be in like the S&P 500 or Bitcoin, but I sleep better at night knowing I have a cash buffer, right? And I have a pretty volatile job, so it's nice to know that if some real estate deal comes up, or if Bitcoin falls 30%, or if the S&P 500 trades off significantly, or a stock that I like trades off, it's nice to know that I can use cash to go buy that dip. I think it makes me a better purchaser of these other assets, even though I could have more upside. I mean, the fact is, if I had not stored up that cash, right? It was for a real estate deal that kind of fell through. But if I had not stored it up in the first place and just put it into Bitcoin, I'd be down right now. Now, would I be up in 5 or 10 years? Probably. But again, at the end of the day, like, it kind of depends on what situation you're in. We're all in different financial situations, but I guarantee you, like, I'm not worth nearly like 100 million or $1 billion or anything like that. But someone that's worth that amount, I'm nowhere close to that. But someone that's worth that amount probably has some cash buffer, or at least assets that they can pull from, and they don't need a 50% rate of return every year. Like, it's just not necessary for them. But someone that's worth maybe 10, 20 grand, something like that, they might, like, in their mind to retire one day, they might need that quicker appreciation. So I'm definitely like in that spectrum. I'm not on one end or the other of worth $10,000 or worth 100 million. I'm in the middle there, like most of us, I'd say. Although there are some people that have more than $100 million that watch this channel, and there are some people, obviously, that have less than $10,000. But what I'm saying here is, like, personal finance is personal. So yeah, everyone's going to want a different cash position, feel comfortable with a different cash position. At the end of the day, the whole point of investing is so that you can do what you want with your time and that you feel good mentally, right? There's a security aspect to that. So that's part of it too. I know that I can buy the dip heavy when other people are just bleeding and then leaving the market, like right now. And congrats. Like, anyone that's gotten to their Bitcoin goal, I don't care if it's 0.1 or 1 Bitcoin or 50 Bitcoin or 1,000 Bitcoin or 0.01 Bitcoin. Congrats, because again, that helps you mentally. 0.1 Bitcoin will probably be worth a lot in the future, and everyone's situation is different. So just like do what you can and pat yourself on the back. Be proud of what you can do. And if you can even put money away in general to buy Bitcoin or to buy hard assets or to buy the S&P 500, congrats, because there are a lot of people that can't do that or won't do that. There are so many people too that make money and could put money away, and they just spend it. They want Uber Eats, which I love Uber Eats. I'll be honest, like, having a kid, super easy to call someone up, and it's much easier, or not to call someone up, to have it delivered. I'm just ranting here. So much easier to have it delivered than put a screaming kid in the car or leave the baby with your significant other while you go out for 45 minutes to drive around town. The food's not ready on time, and then come back and you're like, I just lost 45 minutes of my life to save $5. But some people can't afford it, and some people have the free time. So, I'm saying there are people that just spend money, waste money, and if you're saving, congrats. You're being the majority of people out there. All right, now that I've ranted for 8 minutes about cash positions and Uber Eats, I appreciate you guys watching. If you do want to trade crypto, check out the link to BYDFi. If you made it this far, let me know what what should we do? What you're drinking today. Mine's just not super interesting because I have water here, but I am doing a whiskey club tonight, or I guess it's whiskey, not necessarily bourbon. I set it up with some friends, so yeah, I might be trying some new whiskeys tonight, or bourbons. Let me know what you're drinking, or if you have anything fun planned to drink later today. Maybe scroll through. I know there are a lot of bots down there, but scroll through to see what other people are drinking. It's interesting. There are wild things I've never even heard of that people are drinking here. So appreciate you all watching. Man, this is great. I love that I can just sit here and talk about this stuff with you guys. Talk soon. Again, if you want, I guess not again, but I didn't even talk about this earlier. If you want to join the Telegram, I do post some extra content in there. I talked about, I gave it like a 1 minute message yesterday, a video message in there. So if you want to join it, it's free. Just another place I can put content out because there are people getting kicked off YouTube. I've gotten kicked off YouTube in the last month and a half. So if I get kicked off again, yeah, I'll be over in the Telegram. Thanks so much. See y'all soon. Bye.